So this was a trade that I took on GBPJPY, and I'm going to give you a step-by-step breakdown on how I took this trade. Alright, so if you are new to the channel, please do well to subscribe, and if you have been watching my videos, you haven't subscribed, please do well to subscribe, like, comment, so that I will be sharing all my trade ideas here with you guys, so that you can learn. The only way I feel encouraged is when you watch the video, you like, you comment. I feel encouraged to create more videos like this. Alright, so let me show you the before of this trade. This is a GBPJPY. Alright, so this is the before. This is the before GBPJPY. This is the before. So let's go back to trading view. This is trade here. Alright, so first thing that I always do when I open my chart is to know the direction of the market. So if I've already know the direction of the market, what I will be looking for after the reversal concept, which is a market structure shift, the next thing for me to be looking out for is a double break construction, right? So in this scenario, I have to go to my higher time frame, either my daily time frame or my 4-hour time frame, to mark out my zone. So on my daily time frame, I discovered that market reacted to this other block that is here. Market tapped this other block that is here. So when market tapped this other block, I know that okay, the market is trending to the downside, and market is going to sell until clear out the liquidity. This zone here, market is going to sell until it gets to this other block. I think that's what market is doing here. Market is going to sell until it gets to this other block. So if it gets to the other block, what we are going to look at for is a market structure shift, and then when we get our inducement, and then we look for our point of interest, which is either a breaker block or another block. But if market get to this point and you do not see a market structure shift, inducement, and your other block or your breaker block, you will not take the buy until you have that. But I believe that this pair is going to have a massive sell. So alright, so let me explain how I was able to catch this buy, this sell, sorry. So you can see market have touched these daily time frame POIs. So I already know that when market touch the daily time frame POIs, when market touch the daily time frame POIs, you can see this is the daily time frame POI. So when market touch it, you can see that it started creating a series of, well, before market touch that zone, it was creating a series of higher low, higher highs, higher low, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then higher highs. So when market take this last zone here, this is the last low. Let me repeat that again. Market was creating a series of higher low, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then this is the last high. And like I explained earlier, like I explained in the previous video, I said for the uptrend to be valid, the current high must be higher than the previous one. You can see this high here is higher than this is higher than this, and this must be higher than this. That is how you know that okay, your market structure shift is correct. Then when the market break, and if you observe the low as well, this low must be higher than this low must be higher than this, and then this low here, this last low, must be higher than this one. So if market, anything that causes market to break this zone here, to break below it, that means no longer an uptrend again. It simply means a market structure shift has occurred. And what is market structure shift? when you observe a market structure shift, is simply telling you that the current trend is coming to an end and the market is about to trade in the opposite direction. All right, so market was creating a series of a higher low, higher highs, higher low, higher highs, higher low, higher highs, and then this is the last low before it create this high. So when market fall below this, I mark this zone that okay, market structure shift has occurred. So this is where market structure shift occur. So you mark the zone very well, mark the last candle. So after you get your market structure shift, you can switch time frame to have a clarity. I believe I took this trade from 3 hours time frame. All right, let me check where I took this trade from. So this is the before. Okay, from 2 hours time frame. From 2 hours time frame. So you have to switch between your time frame to know the perfect entry that you are going to use. All right, so this is 4 hour time frame, and you can see on the 4 hour time frame, like I said, we use 2 point of interest, a breaker block and an order block. So in a scenario where you have an order block on your as your point of interest, you go with the order block. So that is what happened here. This is a market structure shift. So this is an inducement. So after this inducement, we have our point of interest here, which is another, we observe another block here. So we now switch to another time frame to look for a perfect entry. So on the 3 hour time frame, I think the other block is very minute there, so I have to switch again, and then to look for a perfect time frame I'm going to use for this trade. So when I switch to my 2 hours time frame, I see the other block very clear. So the other block, this is the other block. So I mark this zone here as my other block. So let me delete this first. So this is my other block here. So I have to mark the body of the other block. Alright, this is how to mark your other block. When you have a short bullish candle and a short body, you mark all the body. And so this is it. You have to mark it this way. So I mark it this way, and then take my order, take my sell. I took myself from this other block here. And then remember, this rectangle that you are seeing here is my daily time frame PY that I marked. So this is how I took this trade. Now if you observe here, I place my SA because of spread. I place my SA slightly above the last candle because of spread, because sometimes market can be manipulated. That is why market just came here and reacted. You can see first market tapping, and then it sell down and then come up again, and the rest is history. Market sold until I think 1:5. Yes, market sold until it take out this zone. So it's as simple as that. It's as simple as that. So now, if you observe what is happening currently in the market, now after a market structure shift, I say the next thing, since you have already know the direction of the market, the next thing to be looking at for is double break of structure. That's what you should be looking at for. So now you can see this is a double break of structure. Market take out this zone here, and then take out this zone as well. Market take out this zone here. Let's check if you take out this zone. No. This candle, this bearish candle here, it took out this zone and then took out this zone, gave us what we call a double break of structure. So after the double break of structure, the next thing to look out for is our inducement. Just like this now. Alright, just like this one. When market get this last low here, market get this give us this last low here. now give us an inducement. What is an inducement? An inducement is the first valid pullbacks after a market structure shift or a double break of structure. So in this scenario of a reversal, after this market structure shift, we have this pullback here, which is what we call an inducement. This is a valid inducement, and for your inducement to be valid, the market needs to pull back and then close below the last candle, the candle that causes the market structure shift. It has to pull back and then close below it. In this scenario, it has to close below the candle that causes the market structure shift, or close at the exact point of the candle that causes the market structure shift. It can either be a single candle or a multiple candle. So in this scenario, you can see this bearish candle here pull back and then close below this candle that causes the market structure shift. This is the candle that causes the market structure shift. So we mark this point as our valid inducement. You look up and then you observe another block, you take your trade. Then since it's a bearish trend, since the directional bias is bearish, you place your TP slightly below the last low, because logically speaking, the market create this low here since it's a downtrend. That means before any reversal will happen, market will have to go below it, or you can place your TP just at this point here, depending on what you want. For my trade, I target my minimum risk to reward is 1:3. All right, so that is how I took that trade. So now for this scenario down, for this double break of structure that I'm talking about, this scenario now, we have already observed that there is a double break of structure here. Market took out this zone here and then took out this zone here, give us an inducement to the upside. So we mark this place as inducement. So this is a valid inducement. So after this inducement, we now look up if there is another block. Now remember, you have to switch between time frame to get your perfect entry. So on a 4-hour time frame, you can see it's still the same thing. On a 4-hour time frame, market took out these two zones, right? Market took out this zone again and then give us an inducement. So this is the first value pullback after a market structure shift. So this is the inducement here. So let me zoom it. This is the inducement. This is the inducement. And then the nearest pointer, since there is no other block here, look up, there is no any other block there. Now, according to the rules in picking a proper point of interest, says number 1 rule say that there must be a double break of structure. Number 2 say there must be an inducement. So we have gotten our double break of structure. We mark it, or it can either be a double break of structure or a multiple break of structure. Remember, so if you have a multiple break of structure, the more you have, the more structure get broken, the more it will be certain that zone is going to hold. So market took out this zone here, this key level, took out this zone here, and then took out this zone here. So it gave us this inducement, this bullish candle here that pulled back. You remember, it has to pull back and close. So it pull back and close above with the body candle. You can see this is a wick. It close below it. Close below it. So now the third rule says I should mark out all your possible point of interest. So let's mark out all the possible point of interest. So this is one of the point of interest, this zone here. Remember, you have to mark the body. So mark the body. Then this is a breaker block. So this is another breaker block. And then this is the other block that trigger the move. Alright. So now we have 3 possible points of interest. Rule number 1 says there must be a double break of structure or multiple break of structure. we have gotten a double breakout structure or multiple breakout structure. The market take out this zone, and this zone here. Rule number 2 say there must be an inducement, so this way we mark out our inducement. Rule number 3 say mark out all the possible points of interest. So we have 3 points of interest. Now rule number 4 say the point of interest to be used has to be unmitigated. That means when market is creating your inducement, when market is having this pullback, market is giving you your liquidity, the market is pulling up, you should not touch any point of interest that you want to use. If you touch the point of interest that you want to use, that means that point of interest has been mitigated. It means that point of interest has been mitigated. So you have to look for another point of interest. Now, when market creates this inducement, it does not touch any point of interest. If you observe, now for mitigation to happen, the market has to touch the body. Remember, the body of the point of interest that I want to use. If it touches, if the candle that caused the inducement, either the wick or the body, touch the body of the POI that I want to use, the candle body, that means that POI is mitigated. But if it touches only the wick, that candle is still valid. That point of interest is still valid to be used. So now when this candle that causes this inducement pullback, I believe it touches the wick, the candle wick. It touches the candle wick, but it does not touch the candle body. So for it to be mitigated, that means it has to touch the candle body. Alright. So now when it pull back, it does not touch the candle body, touch the candle wick. That means the 3 point of interest is still valid. Now, what is the last rule? The last rule says that you should pick the point of interest that is closer to your inducement. So the one that is closer to our inducement is this. So that is why market pull back and sell from this zone. That's why market pull back and sell from this zone. I did not even observe quickly to take this trade. So that's why market sell from this zone. Now, if you go to, yesterday there was news. There was a whole lot of news. So if you go now, you see breakup structures for USD CAD, USD JPY. All those pairs they are buying now. And then GBP USD, Euro USD, GBPJPY, NZD gold. They are BTC. They are selling now. Alright. So that's why market sell from this zone. Use this POI point of interest. So this is how to mark your zone. Now it's not every trade that you need to take. I saw this trade in the morning, but since I have marked this zone here from the daily time frame, from where I was expecting a possible reversal, I cannot take it. Will not give me the risk to reward I'm looking for. It can give you 1:2.7, but or you can just drag it here. But since it cannot give me the risk to reward that I'm looking for, I will not take this trade. Except I will have to go to, since it's 4 hours, I will go to lower time frame to see how I can reduce my risk to reward. Maybe end it with this candle body to have my 1:3. But since I just want to follow the setup, mark my zone very well, I just have to leave the trade because I'm expecting a possible reversal from this zone. That is why I just have to, do away with the trade. I do not take this trade. Alright. So that is it. So I will see you in the next video. Remember to like, remember to comment, remember to subscribe, remember to refer a friend to this channel. Alright. Like I said, stick to this channel. There's a whole lot of things to gain from this channel. Thank you guys.